Kitco Mining's special coverage of the Deutsche Goldmesse is brought to you by Dynacor.
Gold's a great start. This is Paul Harris for Kitco Mining at the Deutsche Goldmesse event in Frankfurt, Germany. Joining me today to talk about this is Lobo Tiggre, editor of the Independent Speculator newsletter. Lobo, welcome back to Kitco.
Good to finally catch up with you, Paul.
Well, Lobo, we're 18 weeks into 2024, and what a year it's been so far. The gold price has remained firmly above $2,000 an ounce, copper at $4.50 a pound. Gold producers are beginning to show margin expansion and juicy cash flow. And M&A is finally picking up. Why is everything suddenly so positive?
Well, I'm glad you framed it that way, because the Twitter space is, well, we can't call it Twitter anymore, can it? The X space, that seems weird. But anyway, social media is full of, oh my God, gold fell $50, what are we gonna do? Is it time to jump out the windows yet? You know, gold bugs are only happy when gold is going up. Doesn't matter how high the gold-dollar exchange ratio is, or how much money the miners are making, as you just referred to. If gold isn't going up, something's wrong, it's manipulation, whatever. So,
would you like something to complain about?
Yeah, so
I'm making too much money.
yes, well, that's maybe part of the problem, is that we haven't been making as much money as we're supposed to be. The whole reason why we bother with these, to use Doug Casey's very technical definition, crappy mining stocks, is for leverage to the underlying minerals. And so if the metal goes up and your stocks are still in the doghouse, if not the circular file, right, then something's wrong. You know, why take the risk if you were better off just buying the metal? So I've kind of gone off the rails from your question here. Great start, I would agree. You know, if gold corrects to $2,300, like what kind of disaster is that? You know, the majors are reporting, right? And we're seeing beats on expectations. Okay, some guidance was lowered, but still we're seeing the big three have all beat. That's really saying something. I'm sure you've interviewed Rick Rule, and he's talked about what talent it took the mining industry to take vast increases of the price of gold to turn into negative free cash flow, right? So we're seeing a significant turnaround, and it's not just gold. To see it in the miners, in their margins, is material and important. So where do you want to go from there?
Well, where I want to go from here, the gold sector, it seems, has got fed up waiting for the US Federal Reserve to start cutting interest rates and just got on with it on its own and started moving up. So the next question, I guess, is as and when the US Federal Reserve does start cutting interest rates, which many people think will be very good for gold, what's going to happen to the gold price?
That is, you know, the billion-dollar question, or perhaps the trillion-dollar question. It's funny that you're asking me this here at the Deutsche Goldmesse, because last year, at this same event, uranium had been my top conviction trade for 2023. And I told these people, you know, for 2024, it's going to be gold, but for the type of reasons that you just enumerated. And instead, we've seen this pop early on in the year for none of those reasons. I'm not sure that I would go so far as to say that the gold sector got on with it. I think we've had significant new buying in the space. I don't think it's just the central banks, because they were doing that, or they have been doing that for more than a year. They've been propping up gold in the face of headwinds. And suddenly this increased buying, I think, does indicate a new buyer. So the good news is we have this new buyer. The bad news is we don't really understand who it is or what the motives are, which means we can't forecast the outcome. You know, did they stop buying this week? Was that $50 drop the end of that new buying? Is this the correction, and now we go back to the trend before this new buying? I don't know. It could be. But to get to the nut of your question, you know, the nuts and bolts, the nub of it, I meant, if that was a tailwind and it fades, it doesn't change the underlying thesis. What I told these people last year and what I still think lies ahead here in 2024. So yes, I think that we're looking at higher gold. I think we're looking at more than higher response in the equities, when all these people that have been, put it this way, I think the stocks have been trying to lead gold down. Many of the institutions, the big money out there, they're not gold bugs, right? They look at the last big spike in gold in 2011, recency bias, and they thought 2020 was a spike like that. So the stocks have been leading gold downwards. That's this divergence that we've seen between gold and the gold stocks. I think that's wrong. And I think this is the year they realize that's wrong and the gold stocks catch up with gold. So I think that's still ahead. That was my thesis. When I say last year, I mean last November, December, so not so long ago. I think that's still in play. The big hockey stick that we saw earlier this year was not based on my thesis. So all these people congratulating me on saying, oh yes, this is the year for gold. Well, great, but that not for the reasons that I gave, so I can't really claim to have been right. So it still remains to be seen if I'm right. I think I am. I think that will be clear this year. But now we're going into that from a much higher base. Like if we were going into that from $2,000 gold, and now we're going into it at 2300, let's say it goes back to 22, that would be a pretty significant retreat. But 22, I mean, that's a fantastic place to go into a bull market that could easily add, easily 10, 20%, which takes us to new nominal records by far. And typically a gold bull will go up like this 50% or something like that. I don't even want to say the numbers out loud, it gets embarrassing. But you hear what I'm saying, right? The answer to your question is all the reasons I was bullish for gold are still on the table, they're still ahead, and we're going into it from a position of much greater strength. So it's pretty exciting.
A lot of analysts and commentators were forecasting $2,300 gold at the end of the year. Yes. So we're here sort of 9-10 months ahead of time. Also, I find your comment interesting about stocks leading gold down. I think we're now in a situation where the stocks are expecting gold to pull them up, but so far that isn't really happening. What do you think it will take for equities to catch a bid?
Well, I've actually written about this recently. It's free on the website. There's an essay called Are Gold Stocks Broken? And the answer, I think, is no. But to quote our friend Rick Rule again, he, in that quip of his about how it took real talent to take a 7-fold increase in gold and turn it into consistently negative free cash flow. There's good reason for equities investors to be skeptical of the producers. They basically flubbed it last time, big time. So, it's one thing if you're a speculator and just, getting into gold stocks because you think gold's going up and the stocks will go up more. It's another thing if you're an investor allocating capital. Why would you do that in an industry that's famous for dropping the football at the crucial moment? So it's a kind of show me, don't tell me, I think. And the fact that we just had the top 3 gold producers beat in Q1, I think is very significant. It begins to answer this question. So the underperformance of the stocks, if you want to look at that as reasonable given the performance of the companies, is being addressed now by the performance. Maybe 1 quarter is not enough. Maybe it'll take next quarter as well. But it sure helps that right now we're seeing higher gold turn into higher margins. That's important. And it's happening now. So this is an interesting point. So let me be clear, dear audience, I'm not saying that the gold stocks are going to the moon tomorrow. I have written it as my view that what's happening now is necessary. It's part of what has to happen for the gold stocks to start performing as they should and have in the past. So I'm very encouraged to see what's happening right now as you and I speak.
Well, maybe we are at the inflection point, the cusp, and it's too early to tell how things will play out. But I think over the last few years, whilst the gold price has been moving up, the leading gold stocks haven't really delivered performance. So if you're a generalist investor, you're looking at Newmont, you're looking at Barrick, the performance hasn't really been there. So you could perhaps be justified in saying, well, if these are the best the sector's got, this is a sector I don't have to look at.
But so are they the best or are they the biggest?
Well, they're the biggest, they're the self-appointed leaders of the sector.
Right. So, but I think that's important. And as a stock picker, if I'm a generalist investor and I get a little bit bitten by the gold bug and I want to get into gold and I want leverage, so I want to buy some stocks, but I don't know anything about gold stocks. I do one of 2 things. I go to the biggest and well-known. So that's why we call these the go-to stocks. This is another Doug Caseyism. The most well-known names, it's where the money goes to when it first gets interested. But when Doug started talking about go-to stocks, the ETFs didn't exist. And so now they have this other choice of the ETFs. So I think that first rush of generalist money goes straight to the ETFs and maybe to the top most well-known gold miners, which doesn't necessarily mean the best, the most well-run, or the best free cash flow producing, right? It's the most well-known. So anybody who's new looks up gold miners, biggest gold miner, Newmont pops up. Does that make Newmont a great company? It's not my favorite, but it's gonna be the #1 Google result, right? So I think I've lost the thread of the question a little bit. I'm not sure I'm answering it, but I think it's important for our audience to do two things. One is, the generalist money will go there, but that doesn't necessarily mean that's the whole story. I think this is a stock picker's market. I think it matters how well a company performs. And if you look amongst the big three, one of them has done better than the others, and it's the one that has the most consistently better operations.
Agrico Eagle Mines.
I didn't say that, but it rhymes. Right? But so that's not rocket science. Like that's a better business. And I don't want to tout any one of these companies, but I think that matters, and it works for the whole space. I think the problem with the ETFs is you have a basket, and the basket is determined by this spreadsheet that has these certain criteria, and it's very hard to put important values in these criteria like political risk. How do you assign a political risk score for Brazil, right? Okay, maybe a basket case country that just had a coup d'etat, that's easy to assign some kind of discount, but something in between like Brazil, how do you assign a score to that? But there is political risk, or Mexico. It's a well-known mining jurisdiction, but really has taken quite a turn for the worse recently. Has that really been priced in? And these ETF baskets, I really don't think account for these kinds of things. So I think if you don't know what you're doing, you don't know anything about this, which is not our audience, but the generalist audience, maybe the ETFs are fine. But if you do have a clue, and you read, and you care about this stuff, and you see what's going on, I do think it's prudent to be a stock picker and pick the better, not necessarily the biggest or the most well-known stocks.
Absolutely, and obviously a key source of information for gold and gold companies is Kitco and Kitco Mining. One thing that can generate excitement in the space is M&A, mergers and acquisitions. We've seen an increasing number of deals starting to happen this year. Of the deals we've seen, are there any that stand out, any that you've liked particularly, any that you've been surprised about?
Well, I'll start with the last question first. I do think it's interesting that we're still seeing so much consolidation at the top. Like this BHP Anglo deal, that surprised me. I mean, do we really need, I'm not a fan of antitrust regulation and so on, but I have to say, the first thing I saw, it's like, wow, do we really need, one Uber miner to rule them all? That would be such a huge conglomerate if that were to happen. But if you're not building, you have to buy. And mining by its nature, this isn't new, I've said this before, right? By its very nature, every ounce you take out of the ground, every pound you take out of the ground is 1 pound less you have. Like you literally mine yourself out of existence as a miner if you don't discover something new or you don't buy it. And if you buy it, you're still not part of the discovery process. You're not adding to the world's balance. So if you're not discovering, you have to buy, and there's only so much you can buy. So this M&A, I have been very early on this. I've been expecting quite a bit of M&A. I have to admit, with some chagrin that I called it a coming M&A tsunami, and maybe I'll still be right, but I was quite early because I think I used the word, I know I used the word before the COVID lockdowns, which put the kibosh on everything. And then after COVID lockdowns ended, we thought, okay, this is it. People couldn't travel to do due diligence, so there should be this big wave of M&A now that we can go and check out the prospects. Not really. And in particular to this moment, we have this surge in M&A, or it looks like this M&A headlines at the beginning of this year. We've seen that last couple of years, and the year just kind of peters out. So at this point, I'm like thrice bitten, 5 times shy, and I don't want to say, this is it. This is the year of the M&A, the new record M&A, because we've seen that surge just fade before. But it still remains true what I said. If you're not building, you have to buy, or you will become a smaller company. Eventually, you mine yourself out of existence. So this is definitely a when, not if question. The signs are encouraging that this might be the when this year. It's overdue. And the so what, dear audience, is if you own good M&A targets, if you own the kind of asset that a major would want to take over, or even farther down the food chain, maybe it's not the 5 million ounce or equivalent in other metals, but it's a high margin, well advanced, de-risked asset that's maybe it's only got 1 million or 2 million ounces, but it's the sort of thing that would be a sweet spot for a mid-tier producer or a smaller producer. I think that those assets are very attractive. And let's say the gold dollar ratio goes nowhere the rest of the year. Like you mentioned, targets were 23, 2,500. We've come close to both. We're over the lower one right now. Let's say we got our targets for the year and just goes sideways all year. You can still win with M&A. Like, if you don't have to bet on a higher gold dollar ratio, as I call it. It's an exchange question in my view, because gold is money. That takeover bid, a modest takeover bid is 30%. A typical takeover bid is 50% and sometimes 100%. So you can see a stock literally double in a day or two with the right takeover bid.
Well, we're starting to see those kind of premiums come into the space. Is there an M&A deal that you'd like to see happen?
Well, there's several, but I'd be giving away the special sauce there. Even Michelle McQuarrie can't drag these names out of me, no offense. But yeah, I don't, that's what people pay me for. So no, I don't give that away.
Okay. While on the subject of M&A, I spoke with Barrick Gold CEO Mark Bristow earlier this week, and he said, quote, "The mining industry is still short on strategy and long on reaction." What do you think about that?
Well, it's interesting because Mark comes across as really one of the most savvy gold miners out there. His experience, he's this tough South African, and he really comes across like he knows what he's doing, and the planning. The way Barrick built mines, pricing in $1,300 gold, so that no matter what happens, right? And I don't know, they may have raised their pricing now for new mine decisions, but for the longest time, even when gold was 2,000, their target was still 1,300, which seemed ridiculously low. But the reason for that is that, Mark and his team don't have to worry about what happens to gold because they know their mine works at much lower prices. So all this stuff sounds great. But then look at all the problems Barrick has had, and I don't need, and if we're hanging our big hope for growth here on Reki Dik in Pakistan, there's a low risk jurisdiction. Sorry, Mark. But so where am I going with this? I have sort of a mixed reaction to what Mark says. He always sounds so smart and so tough and experienced, and you just want to believe everything he says. But then I look at Barrick's performance and the difficulties they keep running into, and you got to take it with a grain of salt.
Okay. Now, one of Barrick's big strategic moves is to get more exposure to copper. Reko Diq is part of that. The Lumwana super pit in Zambia is another part of that. Overall in the copper space, lack of discoveries, lack of a pipeline, lack of M&A before
I get it.
Anglo BHP announcement.
Like, if I was a bean counter on the board, that would make perfect sense to me. And I'm a huge copper bull. I'm not rushing into copper stocks now because I'm still in team hard landing, and the supplies to lithium and any other industrial mineral, I'm not really interested in buying until I'm sure the recession has done its worst. And by the way, if I'm wrong, I don't think I missed the boat. But until I'm sure it's done its worst, I'm not buying. But if you're the company, and not just Mark and not just Barrick, or look at BHP and Anglo and all that, they're after the copper, right? So for the big company's perspective, that makes perfect sense. You don't make decisions on where the prices are going this year, or whether we're going to have a recession even in the next few years. You're making multi-decade decisions, and copper's a no-brainer in my view in that perspective. That said, it makes more sense to me for BHP to get more exposure to copper. They're a big diversified mining company, whereas Barrick Gold is not Barrick multi-metallic, polymetallic, whatever. It's Barrick Gold. So there is a premium that you get, in theory, if gold, does a moonshot, goes past 3,000 and doesn't look back. The copper lining on the gold story for Barrick would actually be a negative. It would hold it back. If it was more of a pure gold story, not that pure gold, right? That would not help them in that case. So there's a risk when you diversify. On the other hand, like over the decades, it makes sense. It's probably the right decision.
Given the outlook for copper and the growing copper deficit that is forecast to come, are you surprised at the lack of exploration for copper, the lack of funding that's coming into junior explorers for copper?
No, not at all. It's sort of like the underinvestment in the oil patch. When you tell an industry that you're not welcome, you're not wanted, stop oil now, we're going to regulate you out of existence, we're not going to give you permits, not in my backyard. All of that applies to copper as well. Somehow, In his wonderful little booklet, Mark Twain wrote Letters from Earth. Lucifer writes to his brother archangel in heaven, this is relevant. He says, all these people on earth, they think they're going to go to heaven and float around in the clouds playing harps. And none of them have a harp. They don't practice the harp. They don't learn the harp. How do they think they're going to be playing harps for the rest of eternity in heaven? It's like this. We have this wonderful dream that we're going to have windmills and solar panels all over the place. We're going to have free energy, take care of everything. But we can't mine anything to produce the machines that make this free energy. It's like not buying the harp, not practicing. How is this going to happen? It's a fantasy. So, but it's the reality that we're in right now. And my thesis for some time has been when push comes to shove, when NIMBYism comes full contact, face to face with the green agenda, I think the green agenda wins. And ultimately mines become permittable even in the United States, right? Or even in eastern states perhaps, right? Because at some point, I mean, there is a percentage of the population of this planet that votes that thinks we're all going to die in 12 years. Sorry, it's 11 now, or is it 9? I'm losing track. If we don't stop oil now. People believe this, and they vote. So, not to beat that to death, I do think that good mining projects that go through the ESG hoops will have an advantage in the permitting. But even that there's not going to be enough. But your question is, am I surprised? No, I'm not surprised. We've been demonizing mining for a century, and there's underinvestment in the space. What do you think is going to happen?
Okay. Well, people don't care what I think. People care what you think, Lobo. How do you think the rest of this year is going to play out, both in terms of the commodity prices and things to do with sort of permitting, M&A, that kind of thing?
Okay, so I think we've benefited from an unexpected tailwind at the beginning. Since I don't know its precise causes, I can't say how long it will last or not. There was so much money involved that I have a feeling that it doesn't just disappear overnight. And I don't think the central banks stop buying regardless. If you're China or Russia or anybody in between and you're worried about your financial lifeblood flowing through New York, that doesn't change. Even if Putin declared peace, right, that wouldn't change. So I think the central bank buying underpins gold no matter what. And I don't know how long this new buyer lasts, but all those other factors, I still think we're headed for a hard landing. I still think the powers that be, as soon as they realize that, will open the money floodgates, and it'll be very, very good for monetary metals in particular. And even if not, recessions are characteristically good for gold. Not so much for other metals, but good for gold. So I am very bullish on gold, and my silverbug friends have criticized me for mentioning the increased industrial aspect to silver lately. But I have to say, in recent months, silver has really changed. Like, I'm seeing it in the data. It's not just I've changed my opinion, I'm not Darth Silver anymore. I'm still Darth Silver. But on a daily basis, you could see silver on the charts, on Kitco charts, moving more like copper than gold. And since the unfortunate events of last October in the Middle East, silver has reverted to mirroring gold more closely. So that's kind of the world waking up and saying, oh yeah, silver still is money, right? Silver is a monetary metal. And that's been robust enough, persistent enough, that it's actually changed my marching orders. When I spoke here last fall, I said pretty much gold only or gold and uranium. And now it's gold and silver. I've welcomed silver back into the fold. I'm looking for new silver plays for my portfolio. My problem with silver isn't anything about silver or even, the recession or any of that. It's not the macro, it's the political risk. Because most of the great silver deposits are in, to use Doug Casey's technical description, crappy jurisdictions. So that's the challenge for me.
Excellent. Well, Lobo, it's been a fascinating conversation. Thank you very much for joining us today.
Thank you, Paul.
And I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of the Deutsche Goldmesse is brought to you by Dynacor.